Greetings, my YouTube family. So today I'm going to share with you how to invest in VOO, and which is one of the exchange traded funds that is managed by Vanguard. And before I get started, I'm just going to disclaimer that this is educational content and it's not meant for investment advice. And as I go through, you will see that I will share with you some historical performance and who manages this particular exchange traded funds, and also give you my thoughts about this particular exchange traded fund. For those who don't know me, my name is Isaac Jonas, and I started this YouTube channel Streetwise Economics to share my content on personal finance and investing. So I cover quite a number of securities. The goal being to just share, the insights, what I think, and not necessarily as investment advice, but just sharing content for educational purposes. I like writing and reading financial news, and I'm actually writing another book with my other book that I got recently published. I'm going to be sharing some. VOO was started in 2010, according to what I saw on the website for Vanguard. And Vanguard is the pioneer in this sector because they started managing ETFs some time ago, thanks to their co-founder who passed on. My soul, rest in peace. He was very visionary in terms of wanting to give investors exposure to securities, but also offering them low fees and good returns. So basically, the VOO ETF pretty much tracks the S&P 500. So what they do, the fund managers, they just buy in equal weighting in terms of the proportion of the shares of the stocks or securities that constitute the S&P 500 index. Those top 500 largest companies in the US, then they just buy them in that fund, and when they have those shares in the weightings, as I will explain below, then over time they then just manage them over time with low fees, and in most cases they beat a lot of other professional investors because they just buy, hold for a long term for the most part, and whatever the S&P 500 will be constituting, then they just have it as part of their portfolio. Because the S&P 500, basically there are some companies that get kicked out and some companies that come in, like Tesla. It joined the club a couple of years ago, and what that means, if you look at the S&P 500 index over the past 50 years, there are some companies that had a major weighting, right? Like if you look at Ford and all those big industrial companies. But now, because there are other companies that are upcoming, you will see that Apple, Microsoft, Amazon, Netflix, even now Tesla, they are now part of those companies that have a bigger weighting in this particular case for the S&P 500. So it's a very good way to be exposed to the domestic US companies, particularly the top 500 largest companies. When I checked, there were about 505, as you see below, companies that this particular fund buys shares on, and they can make a decision to change, but at the end of the day the goal is to retain those outcomes that are very closely linked to the SPX index. Have low fees. Actually, you see that 0.03% compared to other ETFs that I shared. QQQ, they have about, I think it's 0.2% in terms of the fees, and I shared as well as OXX, they have about 0.35% fees, and fees over the long term they can add up, in terms of the money that is reducing the annual return or the average return. And I like this ETF because they have pretty good volume, because sometimes you just need to get out of that position to close that position. So when there is a good liquidity, then it can help you to do so quickly. Now, if I compare the past performance from 2010, I can see that it closely mimics, or it's a matter of choosing between these two, but they offer very similar returns over the long term. So it is another product that is on the market. And currently, when I recorded this was on the 24th of January that I'm recording this. They had 505 stocks that are in the domestic US market, and 505, sorry. And you see that they have a very good return on capital, which is good because it means every dollar that you invest, you are getting a pretty decent return. And also they are exposed across different sectors, which is good because some years they are sluggish returns in some sectors. And technology, just like the S&P 500, it is the biggest weighting from what I can see here, right? And other sectors like financials, they have about 12.90%, which is not bad because that exposure is good. It diversifies the risk. And the top holdings of this particular ETFs at the time of recording, I got this information from Vanguard website, by the way, credit to them. They have Apple, just like the S&P 500. And if I look at Berkshire Hathaway, which had 50.04 at the time I checked uh, their filings in September 2023, you see that most of these index funds and also other funds, they like this particular stock of Apple. So it is a very good business in my view. And also Microsoft, Amazon. So what happens is that they just mimic which stocks that are in that index. So it means in this particular case, like Tesla, when they missed their earnings this year in 2024, it dropped a little bit. Actually, it was, I think, over 15% today on the 24th when I last checked. But at the end of the day, if a particular stock doesn't perform well, it gets kicked out with those uh, people who make the decision here, right? In terms of which company is in that. In this case, the fund manager may potentially just remove it. But if it is removed in the S&P 500, then it means, in my view, it might not be part of this portfolio. But of course, it depends on the decision of the fund manager. Now, in terms of what I think about this fund, it is a very interesting fund because it has low fees, and also it closely gives the same return to the investors, which is similar to what the S&P 500 gives. So this is another product that is possibly a good investment if one wants exposure to the US domestic market. So that's it for the part one. On part two, I'm going to walk you through how to buy this particular ETF. Thank you so much. And if you haven't subscribed, please consider subscribing on this channel. Thank you so much and have a wonderful day.